So yeah, like our big focus at BitSafe is to create technology that enables safe and real yield, and we never take custody of your Bitcoin. Because like, what's the point of risking all of your Bitcoin for maybe like 5 to 10% yield? It just doesn't make sense to me. So as soon as we launch these BitSafe vaults, which will happen in the next month or two, then anyone can really get involved. There's going to be a vault for every flavor. Our big focus is going to be building out the BitSafe brand and all the yield products that we're creating. So for one, SIBTC will come up with a staked iBTC V2. So the structured products would be something that we're going to be building out very soon.
Hello and welcome to another episode of the XDC India Podcast. I'm your host KishanBaalaji, Ecosystem Manager for India. In today's episode, we explore a major leap in Bitcoin finance, secure, decentralized and compliant yield generation tailored for institutions. To help us break it all down, I'm joined by Kadeem Clarke, Head of Product and Growth at BitSafe, a brand at the forefront of Bitcoin native innovation. Kadeem has advised over 25 crypto startups and built a research platform with more than 60,000 subscribers. At BitSafe, he leads the productization of iBTC, the company's flagship solution for institutional Bitcoin yield, delivering native returns without relying on centralized bridges on custodians. Kadeem, welcome to the show.
Thank you so much. I'm very happy to be here. As Kishan was saying, I am the head of product and growth at iBTC and BitSafe. Our biggest focus is on helping institutions put their Bitcoin to work in a safe way. We realize like in the crypto space or in the BTC-Fi space, Bitcoin finance space, there's lots of protocols that have come up in the past couple of years, and they promise these high yields, and people haven't really been getting those yields, but there's also like a big security risk with how these yields are delivered. So we wanted to find a new and safer way to do that for institutions.
Thank you for that, Kadeem. To start things off, what is BitSafe and how does iBTC fit into your vision for secure institutional grade Bitcoin finance?
Definitely. So essentially our mission at BitSafe is to create technology that enables real and safe Bitcoin yield. So we say real, like as I was mentioning before, like there's been lots of people who've been using their points to calculate yield and boost their yield. But then once they have their TGE, we realized that, those projected yields of 20% were really like 1%. And then the safe part is like we want to avoid bridges, but if bridges are being used, making sure that they're safe and the parties that are involved are also very safe too. So yeah, like our big focus at BitSafe is to create technology that enables safe and real yield. And iBTC is the first one that we've created, the first product, which is our wrap Bitcoin for institutions. And essentially the way that works is it's a bridgeless wrap Bitcoin. We allow institutions to lock their Bitcoin on the Bitcoin chain, and then we will mint iBTC on the destination chain, EVM chains typically. Yeah, that's essentially how we work. We're also working on a few more products like our BitSafe vaults, which are like a CDeFi type vault. It allows you to get access to DeFi type investment strategies through DeFi using your Bitcoin. But we're also working on like our staked iBTC, which we're going to be upgrading soon to allow like a consistent yield through that without having to go through the onboarding process that you might have to do through BitSafe vaults.
Wow, that sounds really exciting, to be honest. Not relying on bridges is definitely a safe thing to do in this space, considering how many hacks have happened in the last few years. No matter how safe the protocol is, most of the time at least the hacks have been around the bridges, right? So
yes,
yeah, so I'm happy to see that you guys are addressing that problem immediately.
Yeah, it's a huge problem in the space for sure. And even you'll see like large players like Centaura just recently came out. So two blockchain firms into the block and Trident Trading, they joined forces to create like a bridgeless solution for Bitcoin yield for institutions. Like it's a big thing right now, as we've seen like with synthetic assets. Like we do want to like wrap our Bitcoin and Ethereum and everything, but yeah, right now it's been a bit of a race to figure out how to do that in as safe of a way as possible.
Thank you, Kadeem. So, what makes iBTC different from traditional yield systems that rely on custodians or wrapped assets?
Yeah, definitely. So compared to other wrapped assets with iBTC, so like for instance, WBTC uses a omnibus system. So essentially how that works is you have one centralized custodian, i.e. BitGo. They hold all the Bitcoin. So let's say if you wanted to mint WBTC, you send your Bitcoin to BitGo, and then BitGo gives you WBTC, and then you're able to use that WBTC in DeFi. But let's say if something happens to BitGo and they lose your Bitcoin, then it's gone. So, like, our solution to that is actually using just purely technology and automating the locking process so that you don't have to rely on a centralized custodian. So, the way that we do this, and I think I need to also just quickly clarify that this is for institutions and not for retail. So, on the institutional side, we have a select group of merchants that we do work with. And from the group of merchants, they essentially have to go through a KYB process, which is pretty rigorous, and we also look into their background and their ability to, like, with bankruptcy protection, they're regulated, things like that. So certain institutions are able to become merchants and mint their own iBTC by locking up their iBTC. Otherwise, retail can swap into iBTC, and there's a benefit for them still because they know that we're backed by a network of merchants that are connected through an attester network that validates the transactions, make sure that the network is safe. So that's the value that we bring with iBTC. And then with BitSafe, we're creating different types of vaults. One is a self-custodial vault, where essentially while maintaining custody of your Bitcoin, you're able to execute our trading strategies from our trading partners. That's like one type of vault. And then the other type of vault, you just kind of give your Bitcoin over and we pass it on to our hedge fund partners and they do the trading on it and pass the yield back.
Wow, Kadeem, this sounds amazing. Yeah, you guys are definitely onto something.
Definitely. And I would say, so we do a little bit of both, right? So there's bridgeless and then there's also some bridging. Sometimes you need a bridge to kind of make things more efficient, but also for regulatory reasons. But yes, we do have bridgeless options for you.
That's great. So does iBTC enable yield directly on native Bitcoin?
Yeah, so we enable yield. So people like with our BitSafe vaults can actually lock up their Bitcoin and then earn yield on it. So it wouldn't be like necessarily native, but we have ways for people to earn yield on their Bitcoin. So we enable it. Right now, we're working with this trading firm called Atitlan. They've been around for like over 10 years, big traders. And essentially, what we have is a BitSafe product where people deposit their Bitcoin into a vault on chain. And then that Bitcoin is then sent to Atitlan, where they do hedge fund trading activities and return the yield back.
Great. Thank you for answering that question. So where do node operators and merchants come into play? You said it's basically only B2B, right?
Yeah, good question. So we have iBTC, right? And within iBTC, you have like three core players. One would be the merchants, two would be the testers, and then the third would be like the users of iBTC, right? So essentially, the merchants are large institutions that are like gone through lots of testing, and like we make sure that they're very safe and worthy of holding the Bitcoin. Then the attester network. So what we do with the Bitcoin is it's locked in a 2 of 2 multi-sig, a pre-signed Bitcoin transaction on the Bitcoin blockchain. And the 2 of 2 is held by the person who locked up the Bitcoin and our attester network. So they both hold keys. And the reason why is because you don't want the person who locks up the Bitcoin to just walk away with the Bitcoin. And you also don't want the attester network to like take the Bitcoin, like collude and take the Bitcoin. So it requires both parties in the network to work together, and neither party has like any advantage for like, doing nefarious activities on the network. So everyone is incentivized to work together. So yeah, you have those two parties, and then you have the users, like so the retail users or any other institutions who don't want to become merchants, who can just simply swap into iBTC through like Garden Swap is one platform. We are on Curve and Curve pools and different things like that.
That's awesome. Thank you for, breaking that down. By the way, guys, Kadeem is really, really good at writing things. He really knows how to break down concepts.
Thank you.
Yeah, so we used to work together, and he has a really analytical mind, and he can really break down concepts for people and in a way that I haven't seen. It's a very rare aspect in people.
I really appreciate it. I try my best, especially with this hectic Bitcoin stuff. It's very hard every day to kind of break down to people what I do for a living.
So yeah, BitSafe's model of bridgeless yield through iBTC marks a big shift. What exactly does this term mean, and why is it such a breakthrough for institutional adoption?
Yes, definitely. So for regulatory purposes, institutions have to worry about custody of their assets throughout the entire process. So let's say if an institution takes in $1 billion worth of Bitcoin for a client, or let's say GameStop, for example, who just bought $1.3 billion worth of Bitcoin, right? So, whoever did that purchase for them, the institution needs to make sure that they're maintaining safe custody of that Bitcoin. But no one just wants a Bitcoin to sit there all day. They want to still earn yield on it. So then there's this dilemma, right? It's I want to earn yield on my Bitcoin, but I don't want to put it at risk. Do I want to risk all my Bitcoin for the potential of 12% yield? Maybe not, right? So essentially what we've created is this bridgeless solutions, and that's what we're creating, bridgeless and also safer solutions. But we also need some centralized ones, just like the good ones that kind of work alongside the regulators. But institutions need bridgeless yield in order to maintain the safety of their clients' assets without relinquishing control of it in order to earn a certain amount of yield. So for instance, on BitSafe, we talked about launching that self-custodial vault where you actually hold custody of your Bitcoin, and we just mirror our trading activity over to you into your wallet, and your wallet executes the trades, and we never take custody of your Bitcoin. Because what's the point of risking all of your Bitcoin for maybe 5 to 10% yield? It just doesn't make sense to me.
Yeah, I get what you're saying. Yeah, that's actually a very intelligent way of doing it. Yeah, that's amazing. So if one has to get into this program, right? You said only, institutions can get into this. Yeah. So is there minimum amount of Bitcoin that they have to invest for them to be a part of this program?
It depends on the vault. So we have multiple BitSafe vaults that we're building out, and the vaults are each tied to a certain trading partner. Some trading partners have a minimum investment of $100,000. Some of them have a 0-1. So as soon as we launch these BitSafe vaults, which will happen in the next month or two, then anyone can really get involved. There's going to be a vault for every flavor, which is really cool. So even retail will get to benefit from the self-custodial vaults on the BitSafe side, which is great. The iBTC side with the wrap Bitcoin is more restrictive because in order to wrap that, you had to go through KYB and stuff. But yeah, with the BitSafe self-custodial vaults, retail also has access to that, and there's no minimum.
That sounds great, Kadeem. I'm actually looking forward to this. So BTC stays on its native chain even while earning yield? Is that how it works?
Yes, that's how it works. So we'll have it on the native chain while earning yield. And essentially what we do is bring the centralized finance strategies, the TradFi strategies, hedge funds that do the arb trading or the cash and carry options, right? So we kind of bring those strategies to Bitcoin.
Got it. So you have a lot of banking expertise as well, right?
Yes.
You were a hardcore...
My first job. Yeah, I was very far into TradFi. In college every summer interned at Bank of America Merrill Lynch, and then that was my first full-time job before I quit to join crypto.
Yeah, that's crazy, Kadeem. Your story is just one of those out there which are crazy. So let's talk about institutional trust and regulation. Security and decentralization are critical, but compliance is often the deciding factor for institutions. How does BitSafe ensure that iBTC meets these standards?
So right now we're exploring a few things. One of them is the MiCA licensing. So we've been in the process of exploring that, but we're learning that we may not need to fully get licensed. We just need it approved by the regulating body, and they will just say okay, we recognize this is there. But in terms of regulation, the biggest focus for regulation is making sure that we set up our products in a way that are safe regulatory wise. So the regulators seem to like centralization a lot. So with BitSafe, we are experimenting with different models of our wrapped Bitcoin, which will have different names and they'll have different use cases. So for instance, in Singapore, in order to use wrapped assets with the monetary authority there. The MAS, I forgot what it stands for. There's the SEC of Singapore. They essentially require you to have like a centralized custody model for that wrapped Bitcoin in order for it to be regulatory compliant. So iBTC wouldn't be compliant with MAS, for instance. But for some of our clients who need that, we're creating a wrapped Bitcoin that is centralized that they can then use for it. So our biggest focus at BitSafe is to create solutions, which is why like iBTC is one of our products. But if we're seeing more and more of these institutions want centralized solutions because of the regulators, then we're going to create more of those. But then on the BitSafe side, like we're creating more trust and regulation through, like, first of all, the KYB and the KYC processes, and then like creating the self-custodial vaults too on top of that.
Thank you so much for clearing that up, Kadeem. So how is Chainlink's proof of reserve integrated into your system? I read something about Chainlink's proof of reserve and the integration. So could you explain about that?
Yes, that's a good point. That's also one of the points I should have brought up too when it comes to trust. So yes, we use a proof of reserve so that people can see that the Bitcoin that's minted, the iBTC that's minted, is backed one-to-one by actual Bitcoin. So with Chainlink proof of reserve, we use their oracles to prove that, Bitcoin locked and the vaults are equivalent to the Bitcoin that's minted on all the chains that we have iBTC on.
Okay. So any proactive steps towards meeting global standards like MiCA?
Yeah, so we're in the process with MiCA, and then we're constantly as we're coming up with solutions for different companies that we're working with as prospects, we're like kind of making adjustments to products and models to like align with the regulators. But even now, it's still slightly too early. The US is starting to open up a bit more to Bitcoin, but it's still too early to see exactly what the regulators want yet.
Yeah, I mean, it's still not written in stone, so we don't know what's happening.
Yeah, exactly.
Yeah. Anyway, let's talk about yield strategies. Let's dive into the actual yield opportunities. What structured products does iBTC offer to institutions, and how are they designed to meet traditional expectations?
Definitely. So I would say that the structured products would be something that we're going to be building out very soon. And these will so to clarify, the structured products versus the yield opportunities. So the structured products meaning we just go in and the structured products generate the yield through the actual product, and that's more of a TradFi thing. But definitely the yield strategies that we have available or opportunities would be through our trading partners, like Nine Summits. For instance, they have a strategy that is purely DeFi and diversifies the yield through lending pools, all kinds of things with moderate risk. Then we have a T-Line, which is a traditional hedge fund that does arb trading, long short, high frequency trading too. Samara is kind of a hybrid that does a mixture of both CeFi and DeFi strategies. And then we have AlgoZ and Archimedes that actually mirror their trading activities to the user's wallets. And those are purely DeFi plays. But those are some of the larger institutional plays that we've been kind of pitching to our users, just as those are the trading firms that we've partnered up with, and that's what they're offering. And typically these yield opportunities are providing anywhere from a safe 3 to 5% or a more risky 20% yield APY.
Yeah, I think 3 to 5% sounds about right per safe.
Yeah.
Yeah, so should we go into, the differences between PPNs and YENs, or do you think we should just...
I think that might be too complicated. Yeah, we could save that for later. So PPNs and YENs will be coming to the BTC5 space probably in the next year or two, I would say. So give it a bit more. There's some more infrastructure and stuff that needs to be built, because I was even recently looking into this. Just in general with the structured products, we're seeing so we're partnered up with a chain called Canton. And Canton is this institutional blockchain for the largest financial institutions in the world. They have trillions of dollars in volume already. And essentially what we do want to do at some point is build out some structured products there, so that as the larger institutions, when they come into DeFi or on-chain, then there's structured products there, but that's going to take a lot of time. But yeah, this is something that is going to be further into the future.
Thank you for the alpha, Sensei. So yeah, moving on to onboarding institutions. For institutions looking to onboard, what does the process look like with BitSafe?
Yes, so we have like a very typical B2B sales process. It's the crypto one. You chat on Telegram, hop on a call, and then like so the actual onboarding goes like there's just one merchant agreement. It's just a technology licensing agreement. They sign, they do the KYB, and it's pretty straightforward from there. So yeah, it's just a matter of like the merchant being of like good enough size and reputation.
Okay, got it. So can they self-manage via walls, or is it typically through authorized merchants?
So institutions versus merchants. Institutions have two choices. They can either become a merchant if they want to. Most of them don't want to, and we also don't want most institutions to be a merchant. If they decide not to be a merchant, then what we can do is actually put them in touch with one of our merchants who can do OTC deals. So like they can give the merchant their Bitcoin and they'll give them iBTC.
So is there an interface for or an API layer for seamless integration? I'm guessing the oracles look after all of that.
Yeah. So we have an iBTC dApp that we are redesigning right now, but will be back up soon.
And how does BitSafe handle KYC and AML across jurisdictions?
So for us, we just use Personas. It's like an online KYC platform. We just got that up and running. So that's really how we do the KYC for BitSafe vaults now.
Okay, superb. Thanks for talking about your product. So now, what is the roadmap ahead? What would you like to share with us and the people who are watching this podcast for the next 6 to 12 months?
Yeah, so I'm actually very excited for the next 6 to 12 months. I think there's going to be huge developments in just like our industry overall, but also at our company. Our big focus is going to be building out the BitSafe brand and all the yield products that we're creating. So for one, SIBTC will come up with a staked iBTC V2, which will start earning yield from trading strategies in addition to the network. And that'll be a good option for lots on-chain institutions to get into, to get like something that's close to like a fixed income type product. And then on top of that, we're going to be building out some self-custodial vaults on the BitSafe side so that people can, in a self-custodial way, earn yield, in addition to providing people with more access to more hedge funds through our BitSafe vaults, which might not be self-custodial with some of them. And then in the long term, yes, shifting towards the structured products route and creating some structured products with partners as we get more fixed income products on chain. Then we could build the structured products on top of that. And on top of that, we also have Canton, that chain. We're going to be expanding there and creating some institutional use cases and products, such as like potentially a Bitcoin-backed stablecoin. And then also like lending and borrowing apps there. And so, yeah, there's lots of really cool things happening in the next few months. I would say look out for BitSafe and the yield products and Canton and the institutional products that we build there too.
That sounds really exciting. For the next 3 to 6 months, you're going to be super busy. And I know you're going to do it, Kadeem. So I know the way you work. So Kadeem, thanks for joining us and walking us through BitSafe's mission and the powerful potential of iBTC. It's exciting to see native Bitcoin yield finally evolve into a safe, structured product institutions can trust. To learn more, head over to bitsafe.network or ibtc.network. Thank you so much, Kadeem, and I'll see you soon.
Thank you so much for having me on. This was an amazing podcast, and you organized this very, very nicely too. Great questions. And yeah, we covered a lot of great stuff and very excited to be on here. Yeah, thank you again for having me on board.
Thank you so much, Kadeem. And to everyone tuning in, thanks for listening to the XDC India podcast. Stay with us for more conversations shaping the decentralized future.